Hello friends, today we will look into the third chapter of economic survey, that is fiscal developments revenue relish. So in this chapter economic survey deals about the amount of revenue that the country is accruing and the pattern of spending, in that the amount of capital expenditure and also various sources of revenue, the reforms that were brought under both direct and indirect taxation system, these things discussed in this. So when it comes to the spending of money by the government of India, that is through its fiscal policy, has its own objectives. One thing, there are mainly two type of spending. One is capital spending and another one is revenue spending. Capital spending is to create the assets. Revenue spending is something recurrent in nature for day-to-day administration and day-to-day working. Normally we will use that money. But when we have affected with the pandemic, according to the economic principles, it has necessitated for the government to pump the money into the economy. And across the world, various countries have started pumping the money into the economy because that will boost the demand and purchasing power of the consumers or the citizens. Thereby, the economic cycle can kickstart. But there should be a calibrated approach, or there should be a balance between how much you are pumping and how much inflation that it is creating. And when you are looking into India's spending model, it is something unique, and if you spend it on revenue, it has its own implications. If you spend it on capital, it has its own implication. More spending on revenue is essential when you are facing a critical economic crisis, that too a pandemic in which lot of people has lost their job and lot of people have started withdrawing less salary. So definitely it has necessitated, but it has its own negative consequences also, because pumping of more money can create an inflation. Whereas if you start spending on capital expenditure, it has more multiplier effect and it can create the employment and it can create the asset, and it won't create much inflation. Lot of countries have lost that balance. As a result, they have started experiencing high inflation in the post-pandemic era. Whereas when it comes to the India, the spending or the pumping of money and withdrawing of the money from the economy is so calibrated. As a result, we haven't experienced a high level of inflation. Perhaps we have continued our growth path. So a sustained growth with low inflation has become possible because of a calibrated approach of the government in spending the money or in implementing its fiscal policy. So that is what mentioned here. So we have given a stimulus in the economy, and after that we have given the stimulus in the economy, and after that we have started withdrawing the money from the economy. And if you see the trends in union government deficit over the years on the way to fiscal consolidation. See, during the COVID-19 year, we don't have much revenue. So obviously to meet the expenditure needs, we have to go for a debt. That is why our fiscal deficit is 9.2% of GDP. But after that, carefully we have started reducing our debt burden every year. So that fiscal deficit has come down to 6.7, 6.4. So we are again receding. This is a good thing. So the fiscal deficit is consistently not increasing in the last few years. it is not consistently decreasing. This is what the conclusion that we can draw. And this is something related to the information of finances of the union government. It deals about the revenue receipts, gross tax revenue, assignment to states, net to center, non-tax revenue, non-debt capital. So this you can understand. So here they have taken the data of the April to November, that means only first half of year, and they have given an year to year an average growth. So just try to remember what are these things. Okay, if you know this, it's fine. You no need to remember all these numbers. See, gross tax revenue and net tax revenue are net to the center. These two are very important. Gross tax revenue means the total tax collected by the union government, which includes both direct and indirect taxes. And you are all aware the tax collected by the union will not be enjoyed fully by the union, but some of the amount of money you have to devolve it to the states. That is the constitutional responsibility and the advice or on the recommendation of the finance commission. So what, after transferring it to the states, whatever left to the union, that is tax revenue net to the center. So this is gross and this is net. Okay. And remaining thing, revenue expenditure, capital expenditure, revenue deficit, fiscal deficit, primary deficit, that you are aware. And if you see the fiscal deficit, you can see the number 16.61 lakh crore. This is the fiscal deficit. Okay, of the total expenditure 39.45 crore, the source from the revenue is only 19 lakh crore. That means there is a deficit of 20 lakh. There is a deficit of 20 lakh crore. The total expenditure is 39, but your revenue is only 19. And remaining thing you will get it from the other sources like loans and also capital receipts. Okay. Again, just have an idea. The corporate tax and tax on income, they are almost same, but particularly corporate income tax is always higher than personal income tax. This is what the recent trend in the taxation. And when it comes to the indirect tax, GST, and if you take at the individual level, that means corporation tax, income tax, GST is the highest. But whereas when you take direct and indirect tax, the direct tax collections are high compared to that of indirect tax collection. Just remember this. Okay. So this is the customs union. Altogether the direct tax is high compared to the indirect tax. Yeah. This is the composition, same thing that they have given just now, whatever I have explained. Okay. So as an individual tax, GST collection is high, but in total direct tax collections are high, indirect tax collections are lower than direct tax collections. So again, this is the same thing, that pictographic representation. Customs and excise duties act as a flexi fiscal policy tools. So survey has mentioned about the importance of the customs and excise, how we have used this customs and excise as a flexible fiscal policy tool. See, in the pandemic time, during the pandemic time, there was no much economic activity. As a result, there is no enough tax collection. That too, GST and the direct tax collection. So when there is no much revenue for the union, in terms of, let it be GST or personal income tax and corporation tax, then what we have done is, we have started using the excise and customs as a means to accrue the revenue, because during the time at the international level the oil prices are so low. Then we have started increasing more customs and excise. As a result, Government of India is able to get more revenue. But over a period of time, when the economy got kick-started and when we have started doing the economic activity, we are getting lot of revenue from both GST and again direct taxes. Then during that time, the economic activity across the world has started, the petroleum prices started increasing. Then to reduce the burden, we have started reducing the customs and excise on imported items, and we are getting more revenue from the, let it be GST and direct taxes. That means when the domestic environment is not conducive enough, by using the customs and excise, we have got the revenue. When the domestic conditions are turned to be favorable, then we started reducing the customs and excise, and we have started getting the income from the, let it be GST and direct taxes. So this is how we use the customs and excise duties act as a flexi fiscal policy tool to give a sufficient amount of revenues to the government of India. So this is what they have given here. So that is the flexi policy. Stabilizing goods and services tax yielding return. So economic survey has given a specific information related to the goods and services tax. It has been already 5 years. So there was an analysis on this goods and services tax. So in this, they have clearly mentioned it in this box 3.1. So please note it down, this box number, and what are all the boxes mentioned it in the economic survey are important. Just go through the boxes. Okay. Now in this box, what they are giving is, they are trying to analyze the indirect tax collection in pre-GST era and the indirect tax collection in the post, that means in the GST era. And they are trying to draw a conclusion that based on the economic activity, our tax collection is improving. And when you compare it with the pre-GST era, the tax collection is high in the GST era. That is what economic survey want to convey. I will show you. This is something related to pre-GST era, that is financial year 13 to financial year 17, and in the year 2017 we have introduced the GST. And if you looking into in this 5 years, so the total tax collection subsumed in the GST, not all the indirect taxes, the taxes which subsumed in the GST in the last 5 years. So they have given some 4.88, 5.37 lakh crore, 5.75, 6.90, 7.55. If you take the a growth rate, an average growth rate in the taxation collection, it is 11.53. It is 11.53. Again, if you take the nominal GDP growth in the last, that means in financial year 13 to 17, it is 11.54. So the nominal GDP growth rate is 11.54. The indirect tax, that means the taxes which are all subsumed into the GST, those growth rate is 11.53%. If you take the buoyancy, that means growth in tax rate by growth in GDP, that is 0.9988. That means your tax collection is on par with the growth rate. If your growth rate is increasing at 11.54, your tax collection is also equivalent to that, that is 11.53. This is what happened in financial year 13 to financial year 17. Yes, buoyancy is very, very important in revenue collection. If the buoyancy is above 1, it is better, it is good. But if the buoyancy is below 1, it is not good. That means your economy is growing at a particular pace, but your tax collection is not increasing at that pace. That means maybe you are inefficient in tax collection, or many people are not in the formal net of taxation. And that is, buoyancy is always important. But anyhow, it is close to 1, 0.99. Fine. Now, if you see in the post GST, that means in the GST era, we have taken from financial year 19 to financial year 23. And that 17, 18 years we are in the process of stabilizing the GST, that is why we have not taken. And the total GST collection, if you take The growth rate, if you take, it is 10.2%. The growth rate, it is 10.2%. But the growth rate of the same taxes was 11.53. That means it is less. In the GST era, it is less. The growth rate is less. Maybe absolute number, the taxes are high, but the growth rate is still less. Same taxes, the collection of the same taxes. Why it is low? I'll come to that. The total GST collection including GST on imports. So if you include the GST on imports also, it is 10.9%. Now the Indian nominal GDP growth rate is 9.6%. So the buoyancy on GST collection. If you include domestic supply, if you include the imports, the GST on imports, the buoyancy is here 1.06, here it is 1.12. That means, if you see the buoyancy here 0.99, if your economic activity growing at a particular pace, the indirect tax collection is also following at the same pace, almost close. That is why it is 0.99. But here your GDP is growing at 9.6, but your indirect tax collection is more than the growth rate of GDP. That means it is very good. It is very good. And why this growth rate of 10.2 and 10.9? It is because of economic activity. Simply you cannot say, like in the last 5 years we have, that means in the pre-GST era we have grown at, let it be 11%, and you must grow at 12% or 13. No, whether it is 11 or 12 or 13, it is all depending on how fast your economy is growing. But unfortunately, our economic activity itself is not growing. That means economic activity itself is not happening. So there are various reasons for it, but forget about it. But the point is, if your economy is growing at 9.6% means, if your tax collection is happening at 10.2% means, definitely that is a good move, because your buoyancy is 1.12. So we are more efficient than the pre-GST era. But suppose if you really start growing at the same 11% or 12% or 13% at your GDP, probably the GST, and if you take buoyancy of it at least 1.12, your GST collection maybe grows at 12% or 13% or 14%. Okay. So that means buoyancy is there. This is very important. So that is why economic survey trying to convey that we have reached a buoyancy of 1.12. That is high. And the reason for low growth rate of GST is because of this GDP. And once this GDP picks up, definitely the collection of GST will also picks up. And if you see, one more thing. This is trend in non-tax revenue of the union government. And take the case of all the financial years, interest receipts, dividends and profits, external grants, others, and non-tax revenue. 1.13 dividend and profit, 1.86, 0.97, 1.61, 1.14. That means your public sector undertakings are not giving enough dividends. There is a fluctuation in the dividends. Earlier they used to give high, later it is low, again it increased, again it is reduced. There is no particular specific pattern. External grants are very low, you no need to worry much. Interest receipts, anyway we don't collect much interest receipts, we will pay more interest. Okay, that cycle we need to follow. Otherwise, no, if this number goes up, there is no use in paying the taxes, because we are all paying the taxes to pay the interest on your loan. And if this number, anyway it won't increase, but we have to be very careful. If this number is increasing means we are entering into a debt trap. That is a very extraordinary case. That means if your tax revenues are not even sufficient to meet the interest payment of the loan, that means that is a debt trap. But anyhow, we don't get, this number is not good, this number is not that bad, but at the same time this is not an advisable number, this is not an acceptable number also. Okay, so that's why economic survey is saying buoyancy in revenues Buoyancy in revenue, yes, buoyancy in revenue. When your GDP is growing, definitely the revenue has to grow. And aggressive asset monetization, just now I mentioned. Efficiency gains and privatization would help pay down public debt, thus bringing down the interest payment and releasing more monies for other priorities. So instead of spending money on interest payment, let me release that money for other priorities. So this is what about the financial aspects of the union government, and especially when it comes to the interest payment to the overall expenditure or the overall revenue collections. Okay. So this is something related to the finances. This is the part 1, and in the part 2 I will deal some reforms introduced in the budget, and we'll see it in the part 2. Thank you.
Amrita IAS Academy.